Hello, ladies and gentlemen, and welcome to the show. Listen, get ready for it. Right now, we are going into the front side of a recession. And I've been saying this for a few days. And, I did that show last night or yesterday, and it's just before the price drop in cryptocurrency. And I was a little bit ahead of it, maybe 12 hours or something. Anyway. But now what I'm telling you is get ready for the biggest rally in Bitcoin. I think it's the biggest rally ever coming. I can't tell you exactly how long this bearish trend's going to last, but this is what I can tell you what's going to start the rally. It's all got to do with the Federal Reserve. You see, the Federal Reserve, they went into a tightening policy. And basically what they did first is they started to taper quantitative easing. They tapered it down slowly, and then they stopped it altogether. Well, the markets didn't react too much to that. So then they went in for more. They decided to go in and start doing what's called quantitative tightening, which is the actual reverse of quantitative easing. And they did that for months, and they're still doing it, actually. They're removing about $50 billion a month from the general economy. But what have they really done yet that is stimulating to the economy? Well, they've tried cutting interest rates. Just in the last little bit, they've tried cutting interest rates by 25 basis points. This is not going to stimulate the economy very much, and the reason why is because everybody out there is tapped out. So this is basically lowering the cost to borrow money. But what's the point of lowering the cost to borrow money if nobody's going to borrow it anyway at the rates that we're at right now? So they can lower it again and again and again. Maybe when they get below zero so that they're paying people to borrow money, then maybe they'll start to borrow money again. Okay? But this is not going to have a huge effect on the economy, lowering the interest rate from, say, 2.5 to 2.25 down to 2%. That's not going to have a huge effect upon the economy. We're heading into this recession. The recession is building up steam like a train coming down a hill, a runaway train. It's going to take a lot to stop it. How long are they going to wait? How much speed are they going to let this train pick up to? How fast is the freight liner going to be coming down the mountain by the time they finally decide, hey, you know what, we got to stop this thing? It's going to tear everything to pieces if we don't stop it. It's going to take, the longer they let it go, the more energy it builds up. Runaway train coming down the hill faster and faster, 70 miles an hour, 80 miles an hour. The longer they let it go, the more energy it's going to pick up, and the more it's going to take to stop that train. That's the recession, the train. Anyway, that's the situation we're in. At a certain point, in the not too distant future, because this thing is really disintegrating fast. And it's this disintegration that's affecting the price of Bitcoin. It's also this disintegration that is it's going to start to affect all the markets, not just the stock market. Saw a 700-point drop today. Or was it 800? These big drops. Yesterday they were all cheering. The market went up 400 points, and now it's dropped twice as far as it went up. They should have sold at the top. Some of them did, But they ain't seen nothing yet. You haven't seen nothing yet. We got some situations coming up in the next couple months into November. Now, I'm going to tell you, I think the hard Brexit's going to go through, I think. I'm not sure, but I think if I was a betting man, I would bet on it going through. The hard Brexit. That's going to be terrible for the markets. Deutsche Bank's starting to slide again. Deutsche Bank could just go under like that. Bang, gone. Be a Lehman moment for the world. We got other situations. We got the financial hub that is called Hong Kong. That that center is like a nerve center for, that's where goods come in and out of China and trade. And we got terrible things happening there right now. It could get a lot worse before it gets better. The Chinese economy in general is sinking. German economy is sinking. As this happens, people are going to try to grasp. It's a panic situation. It's like a bunch of people falling off the edge of a ship into the water, and they're all just like doggy paddling, looking to grab onto something to keep from sinking. This is the situation with investors out there right now. Well, they're jumping onto the bonds right now, you know. But there's a time coming when they'll come out of the bonds and they'll come into some other asset class. The asset class they're going to go into, gold, silver, and crypto. Crypto is such a tiny little market. I don't know if you guys realize what the silver market and crypto market, tiny little markets. Oh my gosh, they're tiny. Compared to the bond market. When they come out of the bond market, bond yields are going to jump. And we're going to see that money searching for a home. And that by that time, the Federal Reserve will have reacted to the crisis situation. And I'm going to tell you guys, I'm going to tell you right now how they're going to react, the Fed. At a certain point, I don't know what button's going to push them. It could be sooner. Maybe this 800-point drop today in the markets might be enough to push their buttons and have them change monetary policy. But it might take more. I think it's going to take more. They'll probably sit back tomorrow and let's see, what are we at? Well, they'll probably sit back tomorrow and they will probably want to see what the market's going to do. If it's going to bounce back some. You know? They might use the plunge protection team. They might use the exchange stabilization fund. They might use some tricks to move the market up a little bit, you know, tomorrow, without being overtly manipulating the markets, like in a way that we could see them doing it. But here's the thing. They're going to have to move into out in the open stimulus measures, massive stimulus measures to quell the problem that's coming. And now, I can see that everything is actually starting to turn bearish in this fear mood that the investors are in right now, except for the dollar and U.S. Treasury bonds. Everything else is turning bearish. You can see it. Gold and silver's caught a bid, but how much longer will that last with the sentiment turning bearish like this and the investors really getting scared? We could see gold and silver roll over a little bit too, even. Not as bad as Bitcoin. Bitcoin might roll over worse. But the thing is what I'm pointing out to you guys is the light at the end of the tunnel. So you'll go through a couple months here of bearish activity in the markets because of this oncoming recession, like this train coming down the hill. What we're leading to here is a point where the Fed says, enough, basically, they throw it. They put up the white flag. The Fed will put up the white flag at a certain point. I'm not exactly sure what point that is, but that is it. That when they throw up the white flag, the Federal Reserve, and they completely change monetary policy, and they go back to what's called accommodative monetary policy, then we're going to see a shift. It's going to be like all these people that were trying to run one way, they'll all change direction, run in the opposite direction. All the markets will shift at that point when the central banks shift policy. And that's what we're headed toward. And the worse it gets, the quicker it gets worse, the more it's going to move toward this Fed reaction. Okay, so what we could very well see is we could see a price decline in all of these asset classes like Bitcoin, cryptocurrencies, gold, silver, oil prices, the market, everything, for a little while until this shift occurs. And the worse it gets, the quicker it gets worse, the quicker this shift is going to occur. I see these huge problems coming up that's going to make this shift happen the shift in the monetary policy of the Fed. And I'm thinking in my mind, probably November. That's what I'm thinking in my mind. Then you're going to see Bitcoin probably way down low. You're going to see the biggest moonshot you ever seen in your life when that monetary shift comes, a shift in Fed policy to a really accommodative monetary policy. They're probably going to restart quantitative easing and a number of other programs and drop interest rates down below zero to try to stop this recession. They're going to pour money into the system, huge voluminous amounts of money into the system. You're going to see the dollar take a big hit. And then you're going to see massive money moving out of the dollar. Like I say, they're going to all shift and go in the opposite direction. And that massive money is going to come into these tiny little markets. Silver, cryptocurrency, tiny little markets, and the gold market. The money that's right now going into bonds. Can you imagine that money that's going into the safe havens of bonds if it comes into the gold and silver and crypto markets? What it's going to do? Think for a minute about that. Now, what you're going to be dealing with is the lowest price, or a very low price on crypto. Really bargain sale prices. And then a moonshot when that happens. You know? But until then, we're going to have to suffer. But the best thing to do is, HODLers are not going to suffer. They'll just hold right through the whole thing. I'm going to tell you what, if you're holding cryptocurrency right now and you get scared, if you haven't got a stomach for this, you guys out there, if you haven't got a stomach for this, and I mean if you haven't got really a solid constitution for this, you know, you got to have chutzpah, you got to have guts. You got to have fortitude to make it through this. But if you're one of the ones that's going to make it through this and have the fortitude to watch your investment lose value and hang on to it anyway, right? Because when you take the loss is when you get shaken out of the tree. When the price drops down to a certain level and you just get disgusted and you say, that's it, I'm selling off my crypto. Selling off my gold, selling off my silver. I'm out. I'm into dollars. You're going to do it when it's at the bottom. And then you're going to see the moonshot. And you're going to be crying. You know? Watch for it. This is going to be a big opportunity because this is going to be the big moonshot. And it's going to be like nothing you guys ever seen before. But it's also going to be the entrance into the first starts of hyperinflation. The first seeds of hyperinflation. And this is going to happen out over quite a period of time. When the Fed changes this monetary policy, what you're going to see initially is higher inflation. All around, higher inflation. Everything's going to cost more. You're going to go into Walmart, and you're going to be surprised, you know, all the items in Walmart are going to be up like 30% higher than they were right now. And this is only a few months from now. That inflation is going to continue for a couple years. It's going to slowly get worse and worse. That's the leading in to the hyperinflation. It's profoundly high inflation, but it's not hyperinflation. It's inflation. It's inflation like we had back in the 1970s during the Paul Volcker era. That's what's coming. And it's a type of inflation where the economy's sinking. So it's actually a stagnant economy. And that's why they call it stagflation. It's the worst kind of inflation. It's the kind of inflation that kind of just tears the middle class to pieces because their wages aren't going up. Jobs are being cut. Yet prices are going up daily. We're going to have to endure 2 years of that. And it's going to get worse and worse. It's leading into the hyperinflation. As we lead right toward the front edge of the hyperinflation, the economy is going to start to pick up. And the very front like that's almost 2 years from now, just in the front edge of the hyperinflation, the velocity of money is going to start to move so fast that we're going to see a little pickup in the economy, but prices then will be exorbitantly high. Interest rates will be high. Merchandise will be just like there's going to be such poverty everywhere. You're going to see poverty everywhere. Cities now that don't have people sitting on the sidewalk with a tin can, with a blanket wrapped around them, and they're homeless. Cities are going to be full of people like that. They're going to be all over the sidewalk everywhere. You're going to have to walk around them. There's going to be so many of them, the city isn't going to be able to do anything with them. See, and this is every city. This is your hometown. This is what this stagflation is going to do. And at the very end of it, the economy then is going to start to pick up just a little bit. That's when we're right moving into the hyperinflation. And you've never seen anything like hyperinflation before. Hyperinflation is when your dollar actually turns to dust. That's probably just about 2.5 years from now. That's what really destroys the dollar. And that's the real crisis part of the crisis. Because we've never had a worldwide hyperinflation before. We've always had something to reach out to. Countries that have a hyperinflation, oftentimes they'll use the dollar as a means of exchange. But what happens when it's the dollar that's hyperinflating? What do you use for a means of exchange? Big questions here. This could be devastating, absolutely devastating, an actual hyperinflation of the dollar and the other fiat currencies. This is what's going to create the final stage for cryptocurrencies, gold and silver, where they suck up all of the world's value in that last part, the hyperinflation. That's when they take the final moonshot, and you can't calculate them in dollars, the price. But then when the real hyperinflation hits, you're not going to be able to buy gold or silver with dollars. No matter how many wheelbarrowfuls of dollars you bring, it won't buy you your gold and silver at that point. And the people that have gold and silver, they're going to be able to feed themselves and everything else. Where the people that don't have it, it's going to be we're headed toward a mess, a total mess, is what we're headed toward. Ultimately, in the end, comes the reset. This is when the government resets the value of the currency itself. And they bring out some new form of currency. Probably pegged to gold. Quite seriously. And so then we'll have gold as a backing of the money. And we'll also have cryptocurrencies working in like 2 lanes on the freeway. You got one side where you got gold and silver, the freeway, and the other side where you got cryptocurrencies. And cryptocurrencies and gold and silver and land are the only thing that's going to be any value anymore. Is things like your business or your car, actual items that you have, gold, silver, and cryptocurrencies. All this other stuff, this fiat monetary system, is going to be gone then. We're looking at about 3 years from now. It's all going to be gone. This is all going to happen in the next 2 or 3 years. But this moonshot in cryptocurrencies, gold and silver, once it really gets underway, it's not going to stop until it reaches the final conclusion of this whole thing. And so, this game that we're in right now, the people who are holding gold, silver, and cryptocurrencies, this game that we're in right now, you got to be patient because it's a game that's going to play out over the next 3 years. And it's going to have an awful lot of ups and downs and twists to it. And so you got to be determined. You can't be weak-minded and say, well, I'm going to buy my gold today and I'll sell it tomorrow. Or I'll buy crypto today and I'll sell it tomorrow. Those guys are going to get burned. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.